Hey everybody, Boris. Welcome to the commodity update for December 19th to December 23rd, 2016 for Aussie dollar, dollar CAD, and Kiwi dollar. And I think the single most shocking thing that happened last week was that while the commodity dollars have usually been looked at as the lower volatility trade here for for most of the week, they've basically been sort of quiet while everything else was moving. Euro was moving, yen was moving, pound was moving, and the Aussie and the Kiwi were just kind of holding steady, having those 50-point ranges, and they were a great place to hide out. All of that got completely destroyed on Friday, as both the Aussie and the Kiwi just got decimated, possibly because of the catch-up on the yield issue, possibly because end of the year carry trade outflows. It's hard to say because there wasn't any obvious trigger on Friday that created it, but nevertheless, the technical damage that's been done is massive, massive. We don't have, again, much data on the play. We do have monetary policy meetings. We have some GDST price indices for New Zealand, but basically, it's obviously going to be a very quiet week as far as the data set goes. But what's interesting was I thought the technical damage to the COM dollars, especially the high yielder COM dollars, was so strong that it's very much merits a note. And suggests that they're clearly now sell the rally mode and clearly going to be much weaker, and especially, I think, quite interesting, quite weaker against the European currencies, certainly against the euro. So the euro Aussie, euro Kiwi trades could really come into play next week, especially if we see any kind of a counter trend rally in the euro. So those, and this, conversely, if we get any kind of a yen correction in dollar yen, all of those yen crosses are also going to get completely blasted on the Aussie and the Kiwi yen basis. CAD is always, of course, its own story because of oil. Oil's coming down a little bit, but CAD is performing much better. One of our best calls last week was to trade CAD on a relative strength against both Aussie and Kiwi, and I think that really worked. But generally, when you're looking at the at the trades right now, we broke through some very, very key support and resistance levels. In the Aussie, we broke through this 73.50, which has been a very, very strong support, and now we're in a clear downtrend with the former support now acting as resistance. Dollar CAD staying in this 31-35 range, not much of a change in the trade, but Kiwi dollar also taking out the 70s now to the downside, and now 70 becomes resistance instead of support. A very, very key and massive change. Let's take a look at the charts here and just go through them very carefully. First, let's take a look at the Aussie, and we see this has been a support here since the beginning of November or end of November, and we just took it out completely in Friday's trade. Now, there's possible, of course, short covering back up here, but now this 74, which has been holding for the last couple of weeks, now becomes very, very serious resistance, and the support all the way down goes all the way down till, I think we have to go, let's just go to the weekly charts here for 3 years and just study this. And we see that the next level of support here is basically 71.50 on the weekly charts, which was from middle of last year. And then ultimately, this very much the 70 level. Now, this is clearly the carry outflow trade. Basically, U.S. yields starting to rise to such a level that they're making the Australian and New Zealand yields less attractive from a whole host of positions. Of course, the issue with China not really helping things. I think the escalation of tensions with China, these are the two most vulnerable currencies to any kind of a China trade war, and therefore also maybe perhaps expressing that potential move. And that may have been the reason why the geopolitical tensions may have been the most intelligent reason for why I think you saw the weakness. So generally, when you're looking at this on a technical basis here right now, with the Aussie, it's very much in a downtrend. This weekly candle quite ugly from 75 all the way down to 73, and suggests at least further downside towards the 71 level on the Aussie. Let's take a look at the longer chart also on the Kiwi, because that made some major moves. Again, hugely negative candle. We flame out on the highs, end up on the lows. We're now below the 70 handle. Still, the 69 is key support. It's very much key support, yes. If this kind of holds, we may have potential here to rebuild. But a break of the 69 opens up a move all the way back down towards the 67 level. That's a very, very key level. This is going to be the big level to watch this week in the Kiwi, the 69 level, as a key level. And if they can break it down further, that would suggest certainly a deeper correction. But overall, Kiwi now becomes a pretty nasty looking downtrend with a series of lower highs. This is a weekly chart, so you can really see this quite nicely with a series of lower highs, and basically any type of a rally in the Kiwi here presents a pretty decent sell for longer term short. And then last but not least, dollar CAD. Let's take a look at that also on a longer term chart, Jared, just to see dollar CAD. Not performing as poorly as the other calm dollars. This 131 level did hold. We're now back up to trying to trade back up to 135, but I think the 135 will be the bigger failure here and a pretty good area to short. So dollar CAD still on a relative strength basis looks best to me. As I've said, dollar CAD has been a buy all the way since we started talking about this in the middle of the summer, and now it's really become a sell as we have a series of lower high series. You literally see the change of momentum here from a higher highs, higher lows to now lower highs and lower lows, suggesting that we remain very much in a downtrend, and that the caddy is probably the strongest of all the calm dollars going forward. So that's how the week shapes up. Both of these look very, very weak. I mean, the Kiwi and the Aussie look very weak on a longer-term charts and on the shorter-term charts, and therefore we could have some major tests of key support levels as the week progresses. Wish you guys the best luck, the best of trading. Boris, over and out.